Fear is setting in right now as we tumble down in the crypto markets amid a macro move that's affecting tech stocks, that's coming from tough talk from the Fed about inflation. But what's really important, what most people fail to do, everybody makes this mistake, this one mistake, and it often happens in times just like this. The point of this episode is to save you from making the most important mistake that you can make that often completely ruins people's crypto careers, or at least sullies them for some significant amount of time. We're going to go deep today and show you how you can emerge from moments like this victorious, how exactly I see the market playing out, and how you can completely learn from this moment to become a better trader. It's like if somebody stubbed their toe and is now running around screaming like a lunatic in the streets naked. It's craziness. People need to know how to react in proportion. So let's break down everything going on right now and help everyone watching this avoid a critical mistake, a fatal error. If you guys are excited for this one and you think other people can benefit from this, make sure to smash that like button too, because this is the kind of information that can truly save a life. With that said, let's dive in. There's no way to sugarcoat it. Crypto is crashing. Of course, we're still in the mid 50,000s for Bitcoin. We were at 30,000 just a few weeks ago, and everybody thought we were going down to 10. So have a little bit of perspective here that while things look pretty red and pretty gross, the reality is that we have been up only for months now. So let's figure out what really caused this. What we know is that Jerome Powell over there at the Fed has been getting a lot of pressure to do something about inflation, and that means tapering, meaning stopping bond buying. Also, it means increasing interest rates. When you increase interest rates, that means it's more expensive to borrow money. When it's more expensive to borrow money, it effectively means that money costs more. So it's essentially bringing more value back to the dollar. There was an example of this back in the 80s when inflation spun out of control and they ended up raising interest rates to like 20%. It was the highest in history, and it ended up curbing inflation and actually reversing it significantly. However, if they were to do that right now, it would most likely create an absolute death cross, an absolute fatal blow for the economy, which is struggling tremendously. It was an extremely painful process to raise interest rates like that, one that actually created a ton of economic issues, short term, long term. It brought a lot of value back to the dollar. If they were to do that right now with the weakness of the American economy, I'm not quite sure that the economy would be able to survive it. And I'm pretty sure that the macroeconomists and their modern monetary theorists would also be very, very scared of this path. It would also involve politicians doing something unpopular. This is a really, really tough pill to swallow for most politicians because they all want to be popular. And right now it feels like the wrath of the crowd, the wrath of the mob is really what's leading all sides of politics to be more and more extreme and sort of serve that radical base. Of course, on the left, the radical base wants more money printing, bigger government, more services, more free money, universal basic income, the whole fixins. And of course, tightening up right now would go completely contrary to everything that people are expecting and wanting out of the Fed. But old Jerome's tough talk certainly created its own little tornado here, most notably visible on the NASDAQ. We can see NASDAQ is down 3% in a day. That is a pretty massive drop there, as it is very rare to see the NASDAQ drop multiple percents market-wide on a day. If we zoom in here, we can actually see that some charts like DocuSign actually just got rugged 46% in a day. That's right, DocuSign, a NASDAQ traded, publicly traded stock, a stonk here, registered with good old Gary Gensler and the SEC, went ahead and rugged its holders 50% in just one day. That is some astronomical losses to be chalking up for such a regulated and stable and investor-friendly type investment vehicle. As we can see, tech stocks are on fire right now. And what does that really mean for the macro climate? We're going to spell it out for you. Well, if you've been hanging around anywhere in crypto land, it's pretty obvious that everyone has their panic hats on. And that's usually a really good opportunity to take a breath, take a step back, and try to understand, where is this all going? Where could it possibly be going? Because right now, if you listen to crypto Twitter, everything is a failed breakout, a complacency shoulder, a macro failure, a multi-year bear, an unpredictable amount of losses coming. And so it should come as no surprise that we're clocking a pretty low fear reading here on the Fear and Greed Index, which is, of course, as it gets really low, we've seen that it almost inevitably pumps from there. But the question is not just what's happening today, but what's happening long term. And if you're able to zoom out, which so many people fail to do, which is their fatal mistake, their biggest mistake in crypto is viewing everything in the context of days and weeks. This is the biggest error that you can make in crypto, because days and weeks, the price action is never exactly predictable. There's always sudden pumps you didn't expect and sudden dumps you didn't expect. But if you're able to focus on the distance where we're going inevitably in the future, the entire market starts to appear very clearly. Now, I tweeted this earlier, focus on the mountaintops in the distance, not the speed bumps we're driving over. And the real question is, what are those mountaintops and why am I so sure? Now, as you know on this channel, I'm obsessed with the concept that gaming is going to be the vehicle that takes crypto into the masses that reaches 1 billion users. We've seen the first inklings of that this year in 2021, but you ain't seen nothing yet. And more importantly, what we're seeing is brain drain, not just into gaming, but into every sector of what we're calling Web3, which is essentially everything that's built on top of Ethereum, DeFi, gaming, play to earn, loyalty points, decentralized social media content, and more. Of course, NFTs. These are the core atomic building blocks, heart and soul of the future of the internet. And it's not just a passing fad or a bubble, because what we're seeing now is extremely talented startup teams pivot into Web3. And this was something that was not happening during 2018, during 2019. We were seeing a lot of crypto upstarts trying to become the next Airbnb, not Airbnb trying to become a crypto upstart. This is a reversal of the paradigm where we're starting to see experienced execution-centric teams focus their entire futures on crypto. We saw it with Facebook turning to Meta, with Jack Dorsey's Square now turning into The Block, with a Bitcoin company, Tidal for music, probably an NFT play. The list goes on and on and on. If you think that this is going to end, you are taking crazy pills, or you're just betting against every brilliant mind on the internet. And that's why I'm so bullish on 2022. Whether or not price is ultimately reflected in 2022, what we're going to see throughout the next 12 to 24 months is an historic flood of IQ, of execution, of talent, of excitement into the Web3 space. So regardless of what happens today on price with Bitcoin, with Jerome Powell's Fed, any of these things seem quite irrelevant when you zoom out and realize that the world's brightest minds are rapidly diving head over heels into Web3, and that the only possible conclusion from this is, of course, that these technologies are going to grow by orders of magnitude over the course of the next few years and decades. So of course, these numbers look really, really bad. Coins are down 15%, some of them. But of course, Gala Games just a few months ago was worth less than a penny, and now it's peaked as high as 70 cents. This is some absolutely astronomical growth. And so of course, while these peaks and these drops look jagged and horrific, the reality is that where we're headed, all of this stuff is going to look invisible, just like prior peaks and valleys of the Bitcoin chart. According to Tim McDonald, he says he met another bright young banker analyst today going all in on crypto. The caliber of young talent going into the space is overwhelming. Why would any young finance professional not get on board this freight train? It's not just Web3, it's finance, it's every single meaningful industry is hopping into crypto. Crypto is not a subset of finance. Finance is a subset of crypto, and crypto will very soon come to control and occupy a significant amount of mindshare in every industry. Just like the internet did for brick and mortar, we're seeing crypto do for the internet, brick and mortar, and beyond. This is a revolution that no one day, one person, or one policy can control. And days like this, when you understand that the path forward requires, necessitates higher prices for the most important assets in the ecosystem, Bitcoin, Ethereum, other layer ones, these are the heart and soul, the building blocks, the roads, bridges, and railways that we are building the future of the internet upon. Of course, compared to the dollar, which is being printed like water, they're going to go up in value over a long period of time. So if you can understand that what you really need to be doing during these times is not freaking out, but making your 5-year plan, understanding that you do not have to make it this year, you do not have to make it this month, but you actually have years and years to make it here in Web3, that the next decade is going to be filled with unending opportunity. This is the mistake that everyone makes. Seeing the time frame for their success in such a microscopic moment that they are unable to focus on the larger view, that they are unable to realize how rich they are, how lucky they are to be so early in this movement on the parabola that is crypto. So if I can leave you with just one thought today, it's that you have plenty of time and that you should really be looking at when you take 10, 20, and 30x gains like we've had over the last few months, or 100x plus gains like we've had in NFTs, things like Bored Ape Yacht Club that we got into for less than an Ethereum that are worth so many X's more. It's not wrong to take profits or to defend your position or just to be happy with any level of success. Of course, 100x gains are possible in this industry, and we do a lot of promoting that because it brings in people's excitement. It helps generate the interest in this emerging technology, which isn't so sexy. What I hope I can leave you with is the understanding that your opportunities for success are never going to end unless you choose to let them end, and that if you can do yourself the courtesy of zooming out, you will become a very, very happy person, knowing that 2022, 23, 24, and beyond will be filled with relentless innovation, growth, and excitement around crypto, Web3, and everything that we've come to know and love about this industry. As an aside, a little bonus, I do believe that NFTs will have an amazing winter wonderland. In fact, I'm starting to see quite a bit of heat in the NFT space already. It's bubbling below the surface. This is what happened exactly when we went bearish in the middle of the year. And if we go into a micro or macro bear mode over the next few months, I wouldn't be surprised to see NFTs go crazy. So there you go. Yet another opportunity that if you're paying attention and just taking an interest, you can peel back the layers and continue to have financial success within crypto. I believe it. Of course, my macro thesis that gaming and NFTs are going to completely dominate this industry and most importantly, dominate through the bear market holds true. I do believe that dumps like this are just part of the journey for Bitcoin to reach a multi-million-dollar price point. And of course, I do believe that Ethereum will be worth $50,000 to $100,000 in the not too distant future either. If you're able to understand why and take a little pressure off yourself to make all of your life's money in a month, a year, understand that most people make it in crypto over multiple years. Being there from the beginning to the end of a full cycle, learning lessons during a bear market. This is normal. This is how literally everybody's done it. So if you've lost a little bit of money today, if you think that you're not cut out for crypto or that you just can't get lucky enough, take a second, take a breath, and understand you have so much time. And once you realize that, I believe you'll be on the right path to not only winning here in crypto, but truly experiencing the magic that this industry has to offer. If you guys got value out of this, smash that like button, because the better days are always ahead, especially when it gets very, very dark. To be very clear, I still believe we're in a macro bullish setup, and I don't believe the Fed is going to rug pull us. I do believe that the party will continue, even if we get a massive lurch down. Regardless, if you guys enjoyed this, you can find me on Twitter. I'll make some coin calls there or NFT calls, whatever I'm feeling, just doing whatever I think is most important that day. You'll definitely want to follow me at EllioTrades on Twitter. As always, I thank you so much for watching, and I'll see you very soon on the next episode. Smash that like button, and I'll see you soon.